After two sessions of strong gains, stocks consolidate amid global geopolitical uncertainties. IT and financials drag, even as realty and industrials eke out gains. Interglobe Aviation co-founder Rakesh Gwal sells another 5.7% in Indigo Airlines parent for near 12,000 crore rupees. This is the sixth largest chunk sold since 2022 via block deals and leaves him with under 8% in the carrier. The promoters of PG Electroplast sell 5.6% via block deals, while the parent of Sagility India offers up to 15% equity at a base price of Rs 38 per share to meet the minimum public holding norm. Rajiv Jain, chairman and CIO of GQG Partners, tells CNBC Prime India that India is a part of the solution in Trump's ambition to rewire global manufacturing. He remains bullish on India and recently added Bharti Airtel and HDFC Bank to his portfolio. Hello, good afternoon. You've tuned into Business Lunch, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. And like in the headlines I mentioned as well, last couple of days we saw a bit of a gain coming in for the markets, but today that doesn't seem to be the story. As of now, Nifty is trading in the red as well. So yes, Nifty trading at 24,805 is what we're watching out for. Went up in the green. We saw a sudden spike up there, and then again it's fallen down. As of now, down 0.8% in today's trading session. Nifty Bank, that is also seeing a bit of a red coming in on the screen today as well. So nothing exciting happening on the Nifty Bank front. As of now, down 0.3%. Now the broader end of the market today, what we're seeing, the mid and the small cap, some bit of a green is coming in there, some bit of a respite, at least on the broader end of the market. Mid cap holding on to gains of almost just near 0.1%. Small cap is 0.2% of gain. That's also off slight bit from the day's highest point. IT autos continues to be the big drag coming in for the market. So that's in terms of the sectors and how the market setup is looking like today. But a stock that we're keeping an eye out on today is Indigo. Now, why? Rakesh Gwal, as a part of his planned equity sale in Indigo, sold another chunk of his stake today, with nearly 6% equity being exchanged in a deal worth 12,000 crore rupees. Nimesh is here to tell us how the Gwal family's stake sale strategy has played out until now. Nimesh, over to you.
Well, who says that it's difficult to make money in an aviation stock, and who says that, when a promoter sells, it's negative? Both these logics were defied by Gwal family. So, in fact, in the last 3 years, since September of 2022, the Gwal family has sold stake in Indigo and has raised 40,000 crores. That is $4.7 billion. That's the number. $4.7 billion is what Rakesh Gwal has already raised by selling majority of the stake in Indigo in the last 3 years. So that's the number, 40,000 crores, which is equivalent to $4.7 billion. If you look at the history of the Gwal family, they started selling stake from 2020 to September after the big rift with the other promoters. So they were the co-promoters in Indigo for a very long period of time. So currently they own still 7.8% after today's block deal as well, which is equivalent to 16,000 crores. So if you add to that 40,000 crore, they will raise more than 55,000 crores as and when they sell the remaining stake as well. But it's been a good history of the Gwal family selling stake in Indigo since September of 2022. So this was the first block. It happened at an average price of 1927. And at that point in time, they sold a small stake and raised close to 2,400 crores, nearly 2,500 crores, which was on September 11, 2022. So that was the first block which the Gwal family sold into. And after that, there has been a periodical 5 months or 150 days of lockup, and they've sold further. Next block came in February of 2023. Again, they sold 4% stake and raised at an average price of 1882, and they raised close to 3,000 crores. This was the only block which happened at discount to the previous block. So that was the second block that happened in 2023. Another 150 days, and there was another block. That was in August of 2023. They sold another close to 4% stake and raised close to 4,238 crores at an average price of 2,454. So again, a premium to the last block that they did in 2023. The next block came exactly after 150 days of lockup. That was in March of 2024. Again, the Gwal family sold 5.8% stake in the company at an average price of 2,342 and raised 7,300, almost 7,300 crores. That was again a big block that they did in March of 2024. Again, 150 days of cool-off, and they saw a next block coming in August 29th, 2024. And that point in time, the combined holding that they sold was close to 5.8% stake, and they raised 10,700 crores from that block as well at an average price of 4,759 per share. So that again was in last year. Now, after another 5 months of lockup, post the earnings of this quarter as well, today they've sold another 5.7% stake via block deal. And there they've raised close to 11,928 crores. So that's close to $2 billion that they've raised by selling stake in the fresh tail as well. And this has happened at an average price of 5,250. I'm giving these prices because if you look at the trend of what I've showed, every block has happened at a 10 to 15, 20, 30% premium to the previous block deals. Now, as I said, they still own close to 7.5% stake, which is worth 16,000 crores. So even at this price, if they sell out, they will raise close to 56,000 crores by selling out their entire stake in Indigo. So this has been a fascinating journey, and what an investor he has been, periodically selling out at a premium in Indigo.
Absolutely, Nimesh. This is very interesting in terms of over the years how they've sold stake as well. And they've actually made money. Like you started the link also. Why do you believe that aviation stocks don't make you money? This is a story that's defying that as well. So thank you so much for that, Nimesh. But let's move on to some of these other stocks that are in focus today as well, which are buzzing in trade. Vamakshi is here to list down the stocks for us. Afternoon, Vamakshi.
Good afternoon, Mani. Let me first start off with India Pesticides. The stock is seeing a very sharp uptick after the company reported its numbers. The revenue saw an uptick of almost 64%. The margins have improved from 3% to 15%, and resultantly, the company's net profit is seeing an uptick of almost 22 times. That explains the kind of move that we're seeing on this counter. Bayer Crop Science is another stock from the agrochemical space that is doing quite well. Revenue seeing an uptick of almost 32%, driven by strong performance in spring corn and double-digit liquidation growth in the crop protection portfolio. The margins too have improved here to 16.3%, and the net profit has seen a good surge of almost 50%. Schneider Electric is the next counter we're watching out for. The stock has seen a good uptick this time around. Revenue saw an uptick of almost 24%. This is the highest revenue growth that we've seen since the third quarter of FY24. The margins are down by almost 75 basis points to 14.8%, but the net profit has come in much higher. Keep in mind that in the base quarter there was some tax-related adjustments that did impact the net profit that time around, and that is why we're seeing a very sharp spike in the net profit. Brainbees, on the other hand, reported a rather weak set of numbers. Revenue was up almost 16%, but the company's margins shrunk to only 0.8%, and they've in fact managed to report a loss of almost 11 crore rupees. This is much wider as compared to the loss that they reported in the same quarter last year. Keep an eye out on Electra Green Tech lastly, because the Maharashtra government has cancelled orders of e-buses worth almost 10,000 crores. It doesn't bode well for the stock.
Okay, Vamakshi, thank you so much for that. Keep an eye out on all the stocks that are buzzing in trade on the back of news flows. But earlier today, we had Sridhar Shivaram, who is of Enam Holdings, in our studio. He spoke about the policy expectation from the RBI, the state of Indian markets, as well as his top picks. Listen in.
So we are entering a phase, I would say a golden phase of inflation. I mean, next 9 months, we could see average of 2.5–3% inflation. RBI is going to significantly bring down the inflation forecast when they announce their policy on June 5th. When they announce, obviously, there'll be more credibility, but we are entering a phase. So what will happen is we could see a 50 basis points rate cut in June itself. I mean, these are, my and our predictions. We could go wrong, but based on the numbers that we are seeing, this is how we are seeing. We need support globally. If Fed doesn't cut interest rates, there's only that much that India can cut. If we get support globally, we could see 100 basis points of rate cut. Could be in a golden phase, at least for the next 9 months in terms of inflation, which is what people look at. I mean, and inflation directly affects stock markets. If this plays out well, then what I'm saying that in the next 6 months or 9 months could be a consolidation phase, which can then build into the next bull market. I mean, earnings have to follow through. So you take baby steps right now and build your portfolio for what comes in the next 9 months. We are very bullish on the power equipment space. So if you see, it's a global theme actually. So if you see India will possibly double its solar and possibly double its wind, we may add 60, 70 gigawatts of even thermal. When you get so much of power which comes into the system, it has to be evacuated. So I think the entire value chain will play out. So if you think our markets will give 15% CAGR returns, say over a longer period, obviously it's cyclical, you cannot predict on a year-to-year basis, and you think that at least 10% volume growth, then the mutual funds and the wealth advisors, if you plot them ahead, say if you look at them for today's earnings, it will look expensive, but if you plot say 5 years ahead, then it starts to look interesting.
Okay, on that note, we're going to sip into a very short break. But before we sip into the break, we are excited to unveil our brand new global business news channel, the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset and Global Lens at 8:30 p.m. Welcome back to Business Lunch on CNBC TV18. Now let's move on. And international mutual funds are delivering some of the best returns right now, but most Indian investors can't ride the wave. Sources tell CNBC TV18 that discussions are underway between RBI, SEBI and fund houses to raise the cap on overseas investments. The limit was breached 2 years ago, locking Indian mutual fund investors out of a huge opportunity that came in from international mutual funds. Let's go across to Shivani is joining in with us to give us more on this story. Shivani.
International funds have delivered the kind of returns investors chase, double-digit global exposure and also portfolio diversification. But Indian investors have largely missed it out. Even as international mutual funds surge ahead, most Indian fund houses remain barred from accepting fresh inflows into the global scheme. The reason? A regulatory cap. Indian mutual funds can only invest up to $7 billion overseas, while ETFs are limited to $1 billion. That cap was hit in early 2022 and it hasn't budged since. Now, sources tell CNBC TV18 that RBI, SEBI and fund houses are in continuous discussions about raising these limits. And this discussion is coming at a time when global funds are not just recovering, but outperforming their benchmarks. In April 2025 alone, international mutual funds delivered average returns of 8.51%, making them the top performing category according to Value Research. Zoom out to the last 12 months and the rally looks even stronger. Look at some of the funds. Mirai Asset, Hang Seng, Tech ETF, FOF up 61%. Mirai Asset's another fund, NYSE FANG Plus ETF is up 41%. Another fund, Nippon India ETF Hang Seng Bees is up 32%. Invesco's India Global Consumer Trends FOF is up 25%. But it's not just about the past year. Even in the first quarter of 2025, international funds comfortably beat the broader Indian market. Look at some of the numbers. DSP World Gold Fund 31% and its benchmark has delivered 37% globally. Mirai Assets Hang Seng Tech ETF FOF is up 25%. Similarly, ICICI Pru Strategic Metal and Energy FOF is up 21%. And Nippon India ETF Hang Seng Bees is up 15%. So all of these funds, including those investing in Brazil, look at HSBC Brazil Fund, 15.12% in a quarter, beating the benchmark. Compare all of this to BSE 500 TRI, which posted minus 4.39% over the same quarter. So the opportunity is clear. Despite delivering some of the strongest returns in the market, most of these funds remain close to Indian investors. Now, why are the fund houses wanting a cap revision? This cap was last revised in 2008. Mutual fund industry AUM has grown 10x since that time. Investor appetite for global exposure is rising, and global themes from AI to clean energy to precious metals are gaining traction. For now, fund houses are waiting on the RBI to signal a change, because while the world's markets open up, Indian investors remain in a regulatory lockdown, and the cost of missing out is growing with every quarter. Back to you.
Okay, Shivani, thank you so much for that. But let's move on. And while speaking at an event in Berlin, Germany, European Central Bank's Christine Lagarde believes that euro could become a viable alternative to the US dollar. Listen in.
The ongoing changes create the opening for a global euro moment. And this is a prime opportunity for Europe to take greater control of its own destiny. But let's not fool ourselves. It is not a privilege that will be bestowed upon us because of who we are, what we stand for, and the values we uphold. It will have to be earned together. Any change in the international order that leads to lower world trade or fragmentation into economic blocs will be detrimental to our economy. Sad. Yes, but with the right policy responses, there could also be opportunities. The changing landscape could open the door for the euro to play a greater international role.
And earlier, we also spoke to Ola Hansen of Saxo Bank on a host of issues impacting the commodity space, including the weakening US dollar. Here's what he had to say on the state of the greenback.
It just looks like the trajectory for the dollar points to lower. It hasn't really got many friends. A lot of people would like to see it, including Trump, would like to see it lower, but obviously in an organized and well-functioning manner. Not we have a panic style situation, but the world as we see it right now points to the need for a weaker dollar in the coming months and years, and I think that will happen over time. We just recently saw how there was a quick move in the opposite direction, and that's clearly what will happen when the bets against the dollar becomes as one-sided as they have been for a while, with an overwhelming speculative interest to be short. That does create these periods of volatility. But I think overall the direction for the dollar is towards lower prices in the coming years.
On that note, we're going to slip into a very short break. On the other side, Kerala declares an emergency as major oil spills are feared after a Liberian cargo ship sank off the Kerala coast. Welcome back to Business Lunch on CNBC-TV18. Now, moving on to some national news updates. The state of Kerala has announced a statewide emergency after the Liberian container ship carrying around 640 containers, including 13 hazardous cargo, capsized and sank off the state's coast. CNN News 18's Neetu brings us the latest on this issue.
About 40 containers from the Liberian vessel, which has sunk on May 24th, has reached the coastal areas of Kerala, especially in Kollam, Alappuzha and Thiruvananthapuram districts. 34 of these containers has reached various parts of the Kollam coast. Now, till last night, the authorities were informing that in whatever containers that had shown up, most of it were empty, or in other containers which had products, it was mostly paper rolls and stuff like that. But this morning, they have noticed certain packages which has come in wrapping, like in white sacks, which is kept there. So they are ascertaining what is inside this. That is happening. More containers are expected, more stuff is expected to show up across the coast of Kerala in the next couple of days. That is what the authorities are telling us that they are expecting. But at the same time, they are also saying that the people of the state should be very careful, especially in the coastal areas of the state, because people shouldn't go near, because there are some hazardous material in this vessel which has sunk. So that is something which is of great concern. The warning to the people is that they should stay away, at least 200 meters away from these kinds of products. They shouldn't go near it. They shouldn't touch it. At the same time, another concern is the oil spill that has been noted. And from the spot where the ship has sunk, it was moving in the northwest direction. So this is mostly towards the southern parts of the state, the coastal area. So these are the major concerns that have been raised. The remnants that has been found here, the company has appointed another company to salvage this and to do the environment protection. So that is being done at the moment. But how are these containers going to be taken back from here? By road, it doesn't really look possible because the coastal area, the roads are small. So bringing in big trucks and things to lift this will be difficult. So it will be mostly by sea that they will be taking away these remnants.
Thank you so much for the update there. But moving on, Foreign Secretary Vikram Misri and Deputy National Security Advisor Pawan Kapoor will start their three-day visit to the US today. This is a follow-up to Prime Minister Narendra Modi's visit to Washington in February, when both the countries jointly launched the India-US Compact for the 21st century. The visit also comes weeks after President Trump claimed credit for brokering the India-Pakistan ceasefire in early May. The delegation is expected to clear the air on a number of issues related to Operation Sindoor, to state India's stand on terrorism emanating from Pakistan, and also to take the bilateral ties forward. And with that, we are absolutely out of time on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. As of now, Nifty just managing to hold on to gains, holding on to the 24,800 mark, down 0.8%. Keep an eye out on that. Up next, your Mid Cap Radar.